Most beginners lose because they don't know where to enter or exit. Today I will show you exactly how to fix that. So in the previous video we saw about the strategy how to connect a 200 exponential moving average to our chart. Now I'm going to show you the entry rules. What do we consider when we are entering, and the exit rules, what we consider or look at when we are exiting our trade, right? So now the first thing is the trend direction. The market has to be below or above our exponential moving average. It has to be completely trading above for us to really look for buying opportunities, and it has to be completely trading from below for us to look for our selling opportunities, right? So now for the entry rules here, that is the first, it is trend direction. So now after identifying that, yes, now it is trending down, okay, it is below our moving average, as you can see here. Okay, our market, it is below our moving average. Moving average is here, this 200. It helps us to show the direction of the market, right? The market is really below, right? That means here we shall look for selling opportunities, right? Are you getting it, guys? So now here, the next thing is confirmations, right? In the confirmations, we shall see the candlestick signals. We shall always look for the candlestick signals, and those candlestick signals, we shall look for them in the zones, in supply and demand zones, or support and resistance zones, right? So now here, after identifying that your market is below your moving average, we always wait for the market to come back and touch our moving average. For example, now here it was moving below our moving average, though it has not touched it, right? So now we shall wait for a touch of the moving average, right? You can see all along that market was not touching your moving average, right? Till it came right here. When it came right here, right? When it came right here, you can see that it came and touched your moving average from here, right? It came and touched your moving average. Now when it reaches here, we want to see the entry confirmation. We always look at the candlestick confirmation, right? So now when looked here, remember it has created some bullish candle here. This was a bullish candle right here, this green candle that actually it was a fake out, right? So now this is the confirmation that it made an engulfing candlestick pattern. Can you see this bullish candle? Then this bearish one, it has engulfed this bullish candle, and we said in our candlestick confirmations, we said that we always look at the engulfing candles for us to trade our change of direction, right? So now immediately here, we don't wait for anything. After seeing that, we just risk, okay? We just risk and we put our stop loss. We have to put your stop loss just above that candlestick, right? It is only 20 pips. Then for the TP, for the take profit, always you have to trade your risk to reward, okay? You either trade a 1 to 2 or a 1 to 3. You always have to put your TP right here, or you can even put it below if you are trading a 1 to 3 or 1 to 4. But for this case, I'm trading a 1 to 2. That's why I will put my TP there, right? You can see how the market moved after giving us that confirmation, right? Because it is a bearish trend. So this is the exit rule. We always exit, okay? We are according to our risk to reward. Then for the entry, we always look at the candlestick confirmation, right? So now when we go to another example, we always wait for the market to come and touch our moving average. Now here the market moved above our moving average. Now here we shall look for bullish signals. We are going to wait for the market to come and touch our moving average. When you look here, you can see that the market came and touched your moving average. When it touches your moving average, what next? You always have to look for the confirmation. Which confirmation? You have to look for the candlestick confirmation, right? Here you can see that there was an insider candle. There is this bullish candle that was first formed, this bearish candle, this red one. Then this one, it actually formed inside this. It is an insider candle because this one, it is longer candle than this one. This is a smaller one and it has formed inside this. Then after that, you can see also the next candle. It is actually a doji candle, and it has formed after this insider candle, right? So now that is a very good confirmation. Someone would just come immediately and enter after confirming that yes, we are bullish. For the I told you, for the stop loss, you always have to put below this, right? It is only 5 to 6 pips. Then you target a 1 to 2 or a 1 to 3 according to your risk to reward, right? So now let's see the last example right here. You wait for the market to come and touch your moving average, right? Now you can see here, this one, there wasn't any trade here. Why? Because when the market came and touched this, you can see the bearish candle. There is nothing like a bullish candle it created. There is nothing like a confirmation to show us that we have to enter the market. That's why we always have to look for the confirmations, right? So we leave that. Then we go here. Then the market started moving below our moving average. After moving below our moving average here, we have to look for the bearish signals. You can see when the market came and touched your moving average right here, it created this bullish candle. After creating this bullish candle, there was this insider candle that it created, followed with this doji candle, right? That is a very good confirmation because it has formed on our moving average. That means traders would just come and enter immediately after showing us that yes, we are bearish. Okay. So now for the exit, you always have to exit according to your risk to reward. Then for your stop loss, you always have to put it above those candles. Okay. Can you see how simple and reliable this strategy is if you really follow it? Okay. So comment part 3 risk management and settings. And if you want the PDF version for complete beginners to Forex, I will put a link in the description. And also if you want the ebook or the PDF for risk management for beginners, I will also put the link in the description. Go and subscribe to them. This is Jimmy. Stay safe and goodbye.